All right, guys, back to work tonight, guys and gals. Tuesday evening, November the 10th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Wednesday, not just any Wednesday, a holiday Wednesday's trading session. I got a great video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. E-minis are ready, oil is ready, and of course the gold is ready. Tomorrow may be the Veterans Day holiday, but markets are open, and that doesn't mean that means we're looking for some setups as we go into Wednesday's trading session. Got a bunch of great opportunities we're tracking for tomorrow's Veterans Day trading session. Before we jump in though and get our hands dirty on these charts tonight, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. We publish these newsletters every evening around 7 o'clock Eastern Time, so make sure you subscribe and tune in every evening. And don't forget, if you guys have any questions, drop those questions in the comment section below for me. I'll get them answered as soon as possible later on this evening. And as always, if you appreciate this video, if you tune in every evening, if you enjoyed this video as much as I enjoy making it for you guys, always appreciate you hitting that thumbs up button for me here on this nightly newsletter. So again, please make sure you subscribe so you don't miss any of the good stuff we publish on this video. Hit that thumbs up if you enjoy it, and hit the question section, the comment section, if you guys have any questions below. But enough of the introduction though. Time is ticking. I'm a few minutes late. Let's grab a look at the charts here as we go into tomorrow's trading session. Gold starting off first on the yellow metal. Gold is bullish, coming off of the lows from yesterday into a nice juicy trading range. Trading ranges are magnets. Trading ranges are balanced markets. That tells me there are three reliable setups I'm looking for on gold tomorrow. Got a pretty simple plan of attack on the gold for tomorrow. Boy, oil seems to be continuing to love this vaccine announcement from Pfizer yesterday. Looks like oil continues to run higher. Very strong, you'll notice, very strong finish to the day here today on oil. That strength going higher should give us a couple opportunities to buy some pullbacks for tomorrow. But we do have some major resistance levels overhead that we've got to be prepared for. I'll talk about how to break through them, how to buy the pullbacks, and we'll talk about all the details on tonight's video. And how about the S&P? Boy, I'll tell you, the S&P, big move down, obviously, right, to finish off yesterday. We go sideways, right? Sideways in today's trading session. Choppy, sideways range. Now, right now, the bears have control, but I'll tell you, the bears, it's not easy to be a seller right now on this S&P. The sellers appear to be boxed in, and we'll talk about why I say that tonight, and we'll talk about why I think the easier money tomorrow on the E-mini will be to the long side. So we'll talk more about that here as we go into more details on these charts. Before we dive in though and get these patterns going though, let's check the calendar for tomorrow, because I want to make sure you guys remember tomorrow is a holiday, right? Tomorrow is the Veterans Day holiday. So of course, hopefully I'll be the first to wish all of the veterans out there, everybody active, retired, right? Everybody, thank you so much for your service. I hope you have a fantastic day tomorrow and the rest of the week. I'll tell you, we could not do this without you, right? We couldn't do this whole freedom thing without you guys. So we really love you. We really support you here at School of Trade headquarters, and a very happy Veterans Day to all the vets out there, right? And if you're a veteran, happy Veterans Day. If you're around a veteran, right, tell them happy Veterans Day to me too. I will definitely be celebrating with other vets tomorrow. Looking forward to that as well. Now tomorrow, there's always some confusion, right? Are the markets open? Are the markets closed? Tomorrow is a situation where the markets are technically open, right? If you go to the CME holiday group, you'll notice there's no close on Veterans Day, right? Veterans Day is, and I apologize for the term, but it's kind of known as a half holiday in the financial markets. And again, this is nothing personal to veterans themselves, but it's a federal holiday, but the markets are technically going to be open. In fact, there's a lot of half holidays, right? Columbus Day comes to mind, President's Day comes to mind, Veterans Day comes to mind. There's a couple that aren't, right? Which is why I always tell my clients to go right to the CME group, check the calendar. But just to keep it short, right, tomorrow is a holiday, which means there's no major news events you can see. It does mean to expect lower than average volume, lower than average volatility. But I'll tell you, usually on these middle of the week kind of, and again, I hate to use the term half holidays, but again, middle of the week holiday, right? The kids are out of school, right? The banks are closed. most people are going to take a peek at their charts tomorrow, right? Let's not kid ourselves. So tomorrow's a holiday, but again, with the markets open, there will still be people trading it. Now, keep in mind, the big banks probably won't be as active, right? The big trading firms won't be as active, so it will be a much lower volume environment. In my experience, there's usually going to be one, maybe two really good setups on a middle of the week holiday, right? It could be a smaller window of time, so you want to pick your spots wisely. My best advice to you for tomorrow, and this is of course what I'll be doing as well, is stay patient. Don't force it. If the market's not moving, don't force it, right? Because again, you got to expect some lower volume here. But at the same time, though, we oftentimes, because of that kind of low volume environment, we get these breakouts, we get these runners, right? And that's where a lot of money can be made. And if you're not doing it the right way, a lot of money could be lost on a Veterans Day holiday. So I do think there's opportunity tomorrow. I would caution you, though, right? Caution. Don't force it, right? Don't force it. Now, of course, the best times to trade are usually going to be between 8 o'clock and 11 o'clock Eastern. But tomorrow, right, think about that smaller window of time. And don't forget, guys, even though we won't be trading together tomorrow morning in our trade room, we will be back on Thursday and Friday this week. And of course, you guys can come out and join us every morning, Monday through Friday, right? Again, excluding holidays, of course, right? Be off for tomorrow. So enjoy the holiday for tomorrow, but make sure you come out and join us in our trade room on Thursday. I'll put all the trade room links that you need right in the description of this YouTube video. That way you can get registered, go through our orientation tomorrow, and be ready for Thursday's trading session. But tonight, though, let me make sure you guys know kind of if you're watching charts tomorrow, if you're hanging out around the markets for tomorrow, let me show you guys more about what to expect. And then because of tomorrow being a holiday, I won't be publishing tomorrow night's newsletter. So remember, as you go into Thursday's trading session, the big news is at 8:30 with that CPI and jobless claims, and we get the petroleum status report at 11 o'clock on Thursday. Remember, Thursday is potentially the busiest news day of the week, and I would expect Thursday to be a pretty darn busy day overall, because with the low volume we saw today, right, choppy marks saw today, with the holiday tomorrow, I wouldn't be surprised if you see a blitz of volume, lots of good volatility coming to the markets on Thursday, right? So again, make sure you come out and join us every morning. We won't be trading either tomorrow morning because of the holiday, but again, if you are around the markets, we'll find some good setups for you guys here for tomorrow. Tomorrow, of course, right, the kind of the half holiday there, and of course Thursday we're back to the action. All right, we're looking good here. So now let's grab a look at the charts here for tomorrow's holiday trading session. Got the E-mini, got the crude oil, got the gold here. Let's jump first, though, into the E-mini here today. As I mentioned before, it does look like the E-mini S&P is a bit boxed in right now to the downside. What's the key takeaway right now on the E-mini? The key takeaway is we're definitely bearish overall into a trading range. And typically when you have a bear market into a range, you're going to make your money selling with basically breakout failures above the top of that trading range. You'll notice, though, the bears never really got their shot to take this market lower. What did happen was they poked their head down. They filled that weekend gap from 35.10. We talked about that earlier in the week. And now we appear to be rotating off of this high, and I get my pendulum swing to kind of give me an idea of where this market, right, wants to go. So we're bearish into a range, but this momentum appears to be shifting here, right, off of these lows. Very, very big clue how the market ran lower and then proceeded to run up off of these lows now. Now, I mentioned earlier, it's going to be difficult to be a seller right now, because as we go higher, I've got a trend line in my way, right? As I go lower, there's a lot of support down here. So it's going to be tricky to be a seller on the S&P. I think the easier money going into tomorrow's trading session is going to be looking for a break of this range, right, and a rally going higher. What I'd like to do is get us back up around that 2277, right, and possibly back up, right, to tomorrow's right, to yesterday's high, right? A little bit of forecasting there for tomorrow. So how would I buy this market, for example, right? If I think the easier money is on the buy side, there are two specific breakout patterns of this trading range I'll be watching for. And again, it's a range-bound market. So you got to remember, what goes up will likely come back down. What goes down will likely come back up. It's an overall bear market too. So I can't just buy as this thing goes higher. There are two patterns I'm looking for to try to buy this market as we go, right, as it starts to pop higher here. The first one is called a Try Breakout. It's a strong move higher. It's a shallow pullback to the moving average, a higher high in price, and a trap low, right? That should be a very reliable setup if we can see a very strong move up, right? Very strong move up. The second pattern, which is a little more relaxed, won't require as strong of a move here, is a 1, 2, 3 reversal pattern. Now, 1, 2, 3 reversals, I say these are more relaxed because you don't need to have as big of a strong move to initiate the move. What you do need to see, though, is a strong move off the pullback. We call these 1, 2, 3 breakouts because they're 1, 2, 3 legs, right? And in this case, it's a reversal, it's a breakout. If I can get that 1, 2, 3 breakout, I can mark up that high, I can mark up this low, and I can buy off of this low. So talk about the easy, right, kind of the low-hanging fruit for tomorrow. If I can get this, again, initially, right, if I can get a strong jump up, shallow pullback, higher high, trap low, we call those Try Breakouts. Or the one that is most common, obviously, we talk about these quite a bit, are called 1, 2, 3 breakouts here. 1, 2, 3 breakout, right, and we're buying the low of that new hidden channel. So again, as the market goes higher here, right, as the market goes higher here, I do think those two patterns will be on my radar for tomorrow. Now, if I do want to get short on this, this is going to be tricky, right? First of all, if we do go higher and complete this pendulum swing, this momentum is going to be really, really strong. The second problem we have is a trend line, right? And that trend line is also very difficult because nobody wants to sell into a trend line like that, right? It's quite obvious at this point. So how do I've got a problem, right? I have momentum going against me at this point, right? I have trend line support. It doesn't give me a clear line back into that range. So how is a seller supposed to get short above the high of this range if I'm worried about momentum or if I'm worried about that trend line? That's a good question. And we got I think they're pretty simple patterns. They're called nested failures. What we're going to look for is, because momentum is so strong, wait for the buyers try once, wait for the buyers try twice, and because I don't want to sell into that trend line, I got to use a trap. Now, the key to this pattern is, again, we'll go up right into those highs. We'll wait for the pullback now. Buyers will try once. Lower low, buyers will try twice, and that trap high. What this will do is this will effectively absorb the momentum, right? Because buyers are given 2 tries to get this thing going higher. At the same time, I know I have that trend line here, and so I don't want to just sell into stop losses. I want to sell that trap high to avoid selling into that area of support. That's a great pattern, and that's really probably the best chance we'll get to get short on this market. If the market was, for example, to go up and then back down in this trading range, this is one more shot we have here now to use this trend line. This trend line right now is a support level, right? But if I can get back underneath it, let's say, for example, we go up and back down again, or we just simply, right? Well, yeah, the ideal scenario here would be we go up, back down again, right? And then now what I want to do is I want to use that trend line as resistance. I want to get up into resistance. I want to see buyers come in, try to buy that pullback, and I can sell into stop losses using a buyer failure pattern, right? A buyer failure pattern. That's an easy way, right, to get short. Now, they can really make this all go away for us if they just trade sideways here. So if the market chops around going sideways now, and then we jump higher, right? What's my problem now? My problem now is that trend line doesn't exist anymore, but I'm still very bullish. And so I'm still going to look for those buyers to try once, Buyers try twice. I'm not going to need a trap as badly this time because there's not as much concern about rising support. But I do want to make sure buyers try once, and I do want to make sure they try twice, and I can sell off a trend line. I can sell a trap overhead, right? We call those, again, nested failure patterns. All right, so the plan tomorrow is relatively straightforward. I'm looking for those 2 breakout patterns, right, as we go higher. I think that's going to be the easier money, right, to make here for the buy side, right? So 2 breakout patterns going higher, or I've got to get this up with a nested trap, right? Now, I'll tell you, traps, right? Traps are always my go-to pattern whenever I'm worried about selling too low or buying too high. If you haven't learned trap patterns yet, you definitely want to take my free trading class. I teach all these patterns, by the way, in this free trading course. I'll put a link up there in the upper right hand corner for you. Grab that link and get registered, right, for our free trading course. That way, the next time I talk about a failure pattern or a breakout pattern or a trap pattern, you'll know exactly what I'm talking about. Not to mention, I will send you lots of examples as part of that free course of how we apply these setups on our favorite futures markets, right, like the S&P, like crude oil, and of course, like the gold. So make sure you grab that free course. And again, don't forget all the important links, right, the trade room membership, right? All the free course stuff. I'll put all that down in the description of this YouTube video as well. All right, guys. Now, one last thing here. If the market runs lower, what are our options as the market runs lower? Because you can see there's not a lot we can do down here because there's a lot of support, right? A lot of support down there. That major low from yesterday. Now, we can really make this easy on us. We can really make this easy on this by going strong move down, pulling back, right, and jumping off that moving average. If I can get this 1, 2, 3 breakout out of that trading range, that makes my job so much easier because now we have all of that momentum. I can mark up that low, I can mark up that high, and I can be confident shorting off the high of that channel. Remember though, it's got to be that 1, 2, 3 move, right? What we might see is we might see one of these we saw back here, right, where the market collapses lower. And the problem is I don't want to sell into it, right? I don't want to sell into that low here. So what can I do down there to be safe, right? So I'm not selling into the low. Well, first of all, you got to know where the market's trying to go. It's trying to go back to that 35.06 half area. And I would look for one of those strong moves down, shallow pullback, right? Lower low in price and trap high, right? Before we get there. So traps, again, if we can get a strong move lower here, look for that trap, right, before we go back to retest that, right, that low. Or we may see the market run down, end up going sideways down here, finding a range, and we can sell above that range with a buyer failure pattern, right? So keep that in mind for tomorrow. And again, right, we'll make sure everyone knows how to follow along with us on these stuff, right, in our trade room. But for now, you know kind of what to avoid as the market tries to run lower. It's going to be tricky as the market runs lower. Like I said earlier, the easier money here, it feels like right now, will be on the buy side. So S&P looking pretty good on that. Got a good plan for selling high. Got a good plan for buying a breakout. How about some oil? Now, oil is probably the easiest of all the markets right now, but it's not that easy. You can definitely see we're bullish here on the oil. How would I classify this? What's the key takeaway? The key takeaway is it's a bull spiking channel, right? We spike up, we go into a channel, right? And we're just simply rotating, right, inside of that channel right now. It's a very strong finish to today's session. Anytime we see a strong move in one direction, we know the odds are very good. We'll, at the very least, retest that high, or at the very most, right, continue going higher. Now, there's a lot of open space above us here right now, right? We basically go from 42 to 44 up there. There's not a lot in our way, right? Once we get above 42 here, this is where all the pandemic lockdowns, right, all the lockdown orders really nailed this market lower, right? So if they can push through 42 and hold, they're fine. But right now, that 42 area is a major top up here. So we have to imagine you're going to see some profit taking right up at these highs here. And that's hopefully we get, because I'd love to see a pullback on this. We've got this strong move up. I'd love to wait for a nice deep pullback, buy at support levels here for tomorrow. It is a holiday session tomorrow, so there's a good chance we may go sideways here a little bit at these highs. So the ideal scenario is I want to find levels of support to get long at. What I'd like to do is, and this kind of all depends on the strength of this pullback, there are kind of three situations that you want to be ready for on a pullback here tomorrow. It's a real strong move up, but again, there's a lot of momentum overhead. So one thing you want to look for is if all we get is a shallow pullback, right? Shallow pullbacks are common when you've got all of this, right? All of this momentum. The problem with a shallow pullback is it doesn't give you a very good risk reward ratio. So if all we do is get a very shallow pullback, right? Get underneath that moving average, what I'll have to do is I'm not going to want to buy too aggressively with a seller failure into those highs. I'm going to want to see a trap, right? Remember, one of my favorite entry patterns is called a trap entry, and I like to use those traps to avoid selling too low or buying too high. In this case, right, buying too high. So keep in mind on that pattern if we get a relatively shallow pullback. And again, I would expect a relatively shallow pullback is possible because of the strength of this move. And remember, fundamentals, right? If there's a vaccine, people start traveling, people go to ball game, we get back to normal, in quotes, right? And, who knows when, right? But we have to assume that this market is fundamentally bullish, right? Because of the, kind of the hope, right? Of this vaccine and kind of the optimism of returning right back to some sort of normalcy here. So shallow pullback, I'm looking for traps. What I'd like to do is get down into this, right, into this buy zone down here, get these bears to come in, try to get short off the moving average, right, and then give me a chance to buy into stop losses and then buy those pullbacks on the way back up to retest the high. That would be the best possible scenario here. We get that nice deep pullback, get underneath the low of this channel, get those bears to try to get short, and we can buy into those stop losses with what would be a seller failure pattern. Now remember, that usually will pull up and pull back for a follow-up setup on that pullback setup, right? So keep that in mind, right, as they try to go back up to retest the high. It's, again, a seller failure into a bullish pullback pattern. Now, as I mentioned before, there is a major area of resistance here. So there's always potential this market may just slam back lower. Don't let that run lower fool you, right? They have not reversed the trend yet. They won't reverse the trend until they hold that pullback and run. Right? Remember, that's that 1, 2, 3 reversal pattern. So if all we get is that, right, that jump up, they get the measured move, and we shoot lower here now, what's my concern to be a buyer now? If I want to buy now, what's my concern? My concern is momentum, right? Momentum for who? For the bears. What's the best entry pattern to absorb momentum? It's called a nested failure pattern. I know the bears have a lot of strength. Again, as it kind of shoots off those highs, I want to give those bears the benefit of the doubt. Let them try once. Let them try twice. And once I got bears trying once, trying twice, I like to look for a trend line here, right, to buy off that trend line. I like to look for traps on these, right, to buy below that low, right? So whether you're buying off a trend line, whether you're buying off a trap, right? Bears try once, bears try twice. So again, does that make sense, right? Why those are different? Shallow pullbacks, I'm worried about buying too high, so I'd look for traps, right? Relatively deep pullbacks, great, right? Look for failure into pullback combinations. Deep pullback, respect momentum, let those bears try once, let them try twice. Again, I always like to look for some additional support level to buy off of, like a trend line, like a swing line, right? 1, 2, and then back up. Now, again, we call these nesteds. Now, this nested failure pattern, right? It's a failure instead of a failure. That nested failure pattern, we almost always, when those work, they usually rip running higher. So one of the combination setups you can look for is a trap because you're probably not going to get the pullback, right? I would love to see the pullback happen, right? I'd love to see it happen. I'd love to see us go up, right, and grab that pullback right away. That would be great, right? It's a nested failure into a pullback, but usually that pullback's not going to come just because of the snap, right? That short squeeze, that snap back to the highs. So most of the time it'll snap up. You'll get that shallow pullback, that higher high, and there's your entry off that trap. So we'll definitely be keeping an eye on that here tomorrow as well, right? Maybe we get all of it. Maybe we get half of it. Again, it's tough to tell because of the holiday session, but that's what I've been looking for here on a really, really deep pullback here. Now, again, because tomorrow's a holiday session, do not be surprised if we sit up here and go sideways. Don't let that range fool you. That range becomes a magnet. In those situations, what you want to do is you want to find support levels below the range and combine those support levels with what we call a 2-try failure pattern. We know we're bullish. I want to buy at support below the range because the range, don't forget, what is a range? The range is a magnet. So wait for the price to pull back. Wait for the buyers to run out of bullets, so to speak, right? Wait for those bears to come in and think, right, that bear market has turned or bull market has turned bearish and buy into those stop losses. Wait for that pop lower. Wait for sellers to get short off the moving average, and we're literally buying right into those stop losses, right, for a snap back up to retest those highs. So we know the plan now. If we go sideways, we know the plan, right? If we pull back, 3 different possible, right, pullback patterns. Now, what if we go higher here? If we go higher, you want to keep thinking about those 2 breakout patterns, right? One, and this, it might be as simple as this one, right? We might see it pull back shallow and jump through those highs here. That makes our job easy, right? Mark the high, mark the low, buy the low. Again, first test is always the best test. I can't buy the first pullback because, again, I'll be buying right into those highs. So I want to buy the second pullback, right? That's the one you can trust. That's the one where we have proof of the breakout. We have momentum on our side. And again, we got a plenty of space as we go higher, with 44 pretty much being the next big round number overhead. Another thing to keep an eye would be if the market keeps on grinding higher here, right? Keeps on running higher. Watch for that shallow pullback, that higher high in price, that lower low to get your trap low, right? 2-try trap. And keep in mind too, I'm always looking for ways to combine, right, prior swing highs with those lows to find channels, right? Trending markets, they tell me to use those channels for my entry, right? So we'll keep an eye on that as the market goes higher here. Last but not least, how do we get short? Is it possible to short this market right now? Well, remember, it's very bullish technically. Fundamentally, it's very bullish right now, right? We'll see if these bears can get their hooks in this thing. But most importantly, what would a reversal look like? I definitely don't want to sell into this right now. Very, very strong to the bull side right now. So if we do see a strong move down, the sellers will have to hold that pullback. And if they can hold that pullback, bingo. Now we've got that 1, 2, 3 reversal. Remember, there's a big difference between that and just a sharp move lower. A sharp move lower is just that. It's just a sharp move lower. Let bears try once, let bears try twice, find that trend line, right, or find that trap low, and we're buying back up to retest those highs, right? We call those nested failures. However, right, if they can hold that pullback and jump, bingo. Now that jump off the moving average says now the bears have control. They're hunting for that low of day now, 39.40, and we now know we can mark up that low, mark up that high. First test is the best test off the high of that hidden channel. Now, ideally, I'd like to have this done before we get to 40. There's always a chance we can kind of settle in around 40. But usually, right, when you get a reversal like this, they're going to most likely bury that low and then go back up to that 40 area. So keep in mind on that for tomorrow. All right, guys, oil is looking great. We got oil all ready to go here. So oil, hopefully we can get some buys going on the oil for tomorrow. S&P again, easier, right? Easier on the long side as well. How about some gold? Now, gold might be one of the more tricky markets here right now because really the key takeaway is we had that big down move yesterday, right? That big down move yesterday. And it was too bad because we never really got that, right, that entry. We're looking for that. I was kind of expecting that flag, right, from last night. We never got that entry, right, off of that flag, and it kind of just, it went sideways on you. So we definitely can tell that we've got short-term bullishness. That is, I think, easy to see. But let's not forget about yesterday's big run down, right? So this is where momentum becomes a really big part of this. You can definitely see the buyers accelerated off that moving average. The buyers definitely have control of this market right now, but that doesn't mean, though, this doesn't mean it can't get dragged back down to retest those lows at 1848. The most important thing is we settle into a range today. The range acts like a magnet. What goes up will come down, right? Will come down. What goes down will oftentimes come right back up. What I would be concerned about tomorrow is a very low volume grind, again, because it's a holiday, just back down, right, to retest that low, which could be, again, that's kind of the danger of a holiday trading session, is sometimes you will see the market kind of pick a direction and just kind of slowly grind its way higher or lower. Again, the biggest challenge for tomorrow will be staying patient, not forcing trades, and waiting for a good setup, right? And you may have to wait for quite a while for it, but usually you will get rewarded for your patience on a holiday trading session. So we're bullish into a range. Right now, the easiest trade right now, the two trades I look for right now would be as the market goes lower, right? This will feel like a very bear market. I'll be looking for a nested failure as we go lower, right? Bears try once, bears try twice, because of that momentum from yesterday, really, right? Because of the momentum from yesterday, because we're rotating right off the high. If we do see this thing shoot lower here, I'd love to find a buy setup in this area tomorrow. Hopefully we'll get it. The one thing about it is I'd like to see a seller failure down here. I'd like to see bears fail, but you can already kind of anticipate it, right? If this thing rolls over and goes lower here, it's going to feel very bearish. So my kind of way of avoiding that kind of stop and run that comes with trying to get long into a bear market is give them the benefit of the doubt, right? Let them try once, let them try twice. If I can get that trap low off of that low, that would be ideal. Right? That's ideal. And you can kind of see an example of right here, right? Imagine we get that run down, bears try once, right? Bears try twice. That trap low, right? That's the type of pattern I've been looking for right over here, right? So kind of keep it in mind as we go lower here tomorrow, right? Again, we call these nested failure patterns. Sometimes we get lucky and we get these. We get this kind of one goes up, two, you can easily draw your trend line off that low, right? That is one of my favorite setups. Again, when I'm trying to buy, but I'm concerned about momentum, right? Now, how about the upside right now? Stay out of the middle. Stay out of that middle. What's the upside look like? The upside, jump up, pull back, break higher, and go. What do we call that? We call it a 1, 2, 3 breakout. Remember, we can't buy the first one because of the range, right? The range is a magnet. Trust me, I would love to, right? And I would talk about it if I could. If I thought it was reliable, right? Remember, even a broken clock is right twice a day, right? So you're going to see, you'll see these succeed, but you won't know they're going to exceed until after the fact, right? That's the problem. You don't know they're successful until they are successful, right? Trying to buy that first pullback could easily crumble right back down into that trading range because you're right at the highs right now. Right, and the range acts as a magnet. So what I'll do is I'll wait for that 1, 2, 3 breakout, mark that high. Wait for the breakout. Remember, the key is to jump off the moving average. When it jumps off that moving average, that's when you know you have the breakout that you need. Mark up the high, mark up that low, find that hidden channel. Remember, its first test, right, is the best test off of that low. Another pattern would be that 2-try trap, right? Big breakout higher here, right? Big breakout higher here. Runaway market. It'll feel like a runaway. You'll see that shallow pullback, that higher high in price, right? And that trap low is the entry. Now, where would these buyers be trying to go? Well, you'll notice I have this measured move drawn on, or this triangle on here, or this arrow line here. I must be seeing double ahead of the holiday for tomorrow. So 1907 is a very easy to see target overhead. That is also, curiously enough, that is also I know, look how big this thing was. Right? It's also the 50% level of that big move down. So I really think that's where a lot of people will be coming in to defend it. And I would imagine that'll be an easy target for us for the buy side. If they keep it going, I mean, buyers would love to fantasize about a retest those 1960s tomorrow, but we'd probably have to get some sort of news headline. Something would have to really spook this market tomorrow to really get that big of a move. Again, it's a holiday session. We do expect it to be lower volume, but hey, who knows, right? Who knows? The world we're living in right now is crazy, so could easily happen. So again, just to kind of recap here, looking for breakout patterns going higher, right? 1, 2, 3 breakouts, 2 try breakouts going higher. I'm looking for nested failures, right? Going lower. Okay, that'll make my job a whole lot easier. That way I'm not just simply buying into this bearishness now. If we sit and go sideways, right? So if we sit and go sideways tomorrow, that's going to really help to alleviate my problems or my concerns about momentum, right? So if we go sideways here tomorrow, that now really does a good job at really taking away the threat of those bears, in my opinion, right? It's what I'm most worried about is the market making a run going lower and just steamrolling over everybody, right, and running out of that low. Again, because of low volume expecting tomorrow, right? If the market goes sideways here, that's going to be a vote of confidence, at least in my opinion, of the buyers, right? That will be a good example that, no, we're not as bearish as you think. And so because of that, I would have no problem at that point if we do go sideways for a while. I have no problem now. Again, remember, find levels of support below the range, wait for that breakdown, wait for those seller failures, right, and buy it back up. So keep that in mind too if we do end up, because again, this could easily go sideways for a while. We get one little shot lower, we see a bear breakout failure and right back up into that trading range. That wouldn't be a bad trade as well, right? As long as we commit going sideways here for at least a couple hours here, right? I would imagine that'd be good for the buyers at least. Now, how do we get short on this? The short side is a lot like the S&P was, where there's not a lot of space down here. Okay, so the kind of the big thing is if we get really lucky, right? The luckiest, the best possible scenario would be we go lower, we hold the pullback, we jump off that low, we clearly see a lot of momentum. Before we reach that low, we can get a short off the high of that channel. Right? Now that will be a bit of a thread the needle, as you can imagine, right? So that would kind of be the ideal scenario. Or the market simply takes off like a rocket ship, right? Or bleeds lower, right? We may not see that rocket ship type of personality tomorrow. The market bleeds lower here. We get that shallow pullback, that lower low, again, before we get down to retest that low and that trap. Why trap? Because traps are the best when you're trying to avoid selling low or buying high, right? We may also see the market, like I mentioned earlier, we may also see it make a run lower and go sideways down here, right? If that's the case, what do you do in a bear market going sideways? You sell above the high. You use what? You use those buyer failure setups. All right, so some food for thought there as the market goes lower. Just be very careful selling into that low. And don't forget again, tomorrow will be a great day while you're off from work, right, or celebrating Veterans Day to grab that free trading class, learn those setups, or come out and join us every morning in the trade room, right? Tomorrow, of course, we get off because of the holiday. Right? But back on Thursday morning, I would love to see you there, right there with me. So again, grab that link right in the upper right-hand corner. Grab that link, get registered for our free trading class, or, right, join a membership. Grab our membership links in the description of this YouTube video, right? Join up as an advanced member. Come out and join us every morning in our trade room, Monday through Friday, excluding holidays, of course. You can find all the details you guys need about membership in the description of this YouTube video. We trade this stuff together every morning at the opening bell. It's really the best way to learn this and really do it the right way is to come out here and do it with me every day at 8 o'clock Eastern time. Don't be afraid, of course, to call that toll-free phone number. I'm not going far tomorrow. I'll be around the office pretty much all day tomorrow, so call that number if you guys have any questions. If you have any questions also, use that live chat on the left, live chat on the right, and you can always drop questions in the comments section below. Guys and gals, hope you enjoy your holiday tomorrow. Hope we can find some good setups, right, with the help of this video newsletter. Hope I've earned a like and a subscribe on this YouTube channel, and I hope you'll come back and see us again in the next edition of our nightly newsletter. We'll come back on Thursday evening to get ready for Friday's trading session. All right, y'all, have a great rest of your day out there. Have a great Veterans Day. Happy Vets Day to all the veterans out there, and we'll see you guys next time. Adios, amigos. Bye-bye for now.